Hello students, welcome to my channel KT's Commerce Classes. Today we will explain the topic accounting for revaluation of assets and reassessment of liabilities. Chapter Reconstitution of Partnership. Method 1. It becomes necessary to revalue the assets and reassess the liabilities of the firm at the time of change in profit sharing ratio. Revaluation account is prepared to record the changes in the value of assets and liabilities at the time of reconstitution of partnership. So what is revaluation account? Format of revaluation account. Debit side, what are the items will come? Decrease in the value of asset, increase in the value of liabilities, unrecorded liability. Credit side, what entries will be recorded? Increase in the value of asset, decrease in the value of liabilities, unrecorded asset. If debit side, if credit side total greater than debit side total, profit will arise. That will be transferred to partner's capital account or current account. Current account when to transfer in case of fixed capital. If debit side total greater than credit side total, what will arise in revaluation? Revaluation loss will arise. That will be also transferred to partner's capital account or current account. When to transfer to current account in case of fixed capital. So what are the accounting entries in revaluation we can prepare? Revaluation revaluation of assets, increase in the value of asset, general entry will be asset account debit to revaluation. For unrecorded asset, entry will be asset to revaluation. For decrease in the value of asset, it will be revaluation to assets. In case of reassessment of liability, decrease in the value of liability, general entry will be liability to revaluation. For increase in the value of liability, general entry will be revaluation to liabilities. For unrecorded liability, general entry will be revaluation to liabilities. For profit on revaluation, general entry will be revaluation account debit to partner's capital or current account. A profit will be distributed in what ratio? Profit will be distributed in old ratio. So in case of profit will be credited to partner's capital account in old profit sharing ratio. Partners in capital account in old profit sharing ratio. If any loss in revaluation arises, it will be debited to partner's capital account in old profit sharing ratio. So general entry for loss, partner's capital account or current account debited to revaluation. Method 2, when revised value of assets and liabilities not to be recorded in the books. Previously we taught what is revaluation. Revaluation credit side, what are the items we recorded? We recorded increase in the value of asset, unrecorded assets, decrease in the value of liability. Here also same concept we will apply for calculation of net effect of revaluation. That is step 1. For calculation of net effect of revaluation, credit side, what are the items written in the revaluation? Increase in the value of asset, decrease in the value of liability, unrecorded assets. Less all debit side item, decrease in the value of asset, increase in the value of liability, unrecorded liability. What we will get? First we have to find out net effect of revaluation. Net effect means what? Either profit on revaluation or loss on revaluation. So what is the step 1? We have to calculate the net effect of revaluation. For finding out the net effect of revaluation, all credit side item will be added. What are the credit side items? Increase in the value of asset, decrease in the value of liabilities, unrecorded assets. All debit side item will be deducted, decrease in the value of asset, increase in the value of liability, unrecorded liability. That is net effect. Net effect can be either profit or loss on revaluation. Step 2. What is step 2? We have to ascertain the gaining and sacrificing ratio arising out of change in profit sharing ratio. Due to change in profit sharing ratio, we have to find out what gaining ratio and sacrificing ratio. Now, gaining partner shares equals to net effect of revaluation into rate of gain. A sacrificing partner share equals to net effect of revaluation into rate of sacrifice. Now, adjustment entry. In case of profit of revaluation, gaining partner's capital or current account debit to sacrificing partner's capital or current account. So, in case of profit, what will be the entry? Gaining partner capital or current account debit to sacrificing partner's capital or current account. When to apply current account? In case of fixed capital. In case of loss of revaluation, sacrificing partner's capital account or current account debited to gaining partner capital or current account. Current account when to apply? In case of fixed capital. One question has been given regarding revaluation account, balance sheet and capital account. The following is the balance sheet of J and D as on 31st/12/2015. Liability side given J's capital 60,000, D's capital 40,000, creditor 18,000. Asset side land 6,000, building 40,000, furniture 4,000, stock 25,000, bank 31,000, cash 12,000. Both side total 1,18,000. Now, partners share profit and losses in the ratio 3:2. This is the old ratio given in the question. From 1st January 2016, they agreed to share profit and losses equally. For this purpose, they decided that building is to be appreciated by 25%. Current value of furniture is to be taken at 3,000. Land and stock are to be valued at rupees 15,000 and rupees 30,000 respectively. What to prepare? We have to prepare revaluation account, partners capital account and revised balance sheet as at 1/1/2016. Now what we discussed in the previous class, revaluation account contains increase or decrease of asset and liabilities. If asset increases, which side we should record? We should record credit side. If the value of asset decreases, which side we should record? Debit side. If liability increases, which that means that is my loss, which side I will record? Debit side. If liability decreases, that is my gain, which side I should record? Credit side. Now question given, building is appreciated. Appreciated means value is increasing by how much percent? 25%. Building given in question 40,000. 25% means 1/4 of 40,000. How much increasing? 10,000. So increase of asset, which side I will write? Credit side by building. How much? 10,000. Now in balance sheet, the value of building will be how much? Value of building will be given in the books 40,000, add increase 10,000. Revised value will be 50,000. Second point, current value of furniture to be taken at 3,000. Furniture given in the books how much? 4,000. Now value becoming 3,000. So value has been decreased by how much? Decreased by 1,000. We previously discussed asset value if reduces or decrease, which side we should record? We should record debit side. to furniture. How much? 1,000. So value of furniture in balance sheet will be furniture. How much given in question? Given in question 4,000. Value was depreciated by 1,000. So less depreciation. $1,000. Now value will be how much? 3,000. Now third point, land and stock are to be valued 15,000. Land, what is the value of land? Land valued at 15,000. Given in question how much? Land given in the books given 6,000. Now becoming how much? 15,000. So land is increasing by how much? 15,000 minus 6,000, that is 9,000. So increase in asset, credit side of revaluation. Same thing, stock how much? Becoming 30,000. Stock given in the books how much? 25,000. Now becoming 30,000. So it has been increased by how much? It has been increased by 5,000. So increase of asset, which side I should write? Credit side. Now in balance sheet, value of land will be how much? Land given in the books how much? 6,000. Add increase. $9,000. Now value will be 15,000. Same thing in case of stock given in the books 25,000. Add increase 5,000. Now value of stock will be how much? 30,000. Remaining assets remain as it is. It will be bank 31,000. Cash how much will be? 12,000. Now revaluation account, previously we discussed. Now we have to see which side is greater, debit greater or credit greater. If credit greater than debit, credit side total greater than debit side total, then profit on revaluation will arise. That profit on revaluation will be transferred to what account? Transferred to partner's capital account. Now it will be how much? 24,000. So credit side is 24,000 greater than debit side. So profit on revaluation how much becoming? It will be 23,000. To profit on revaluation, transfer to capital accounts. In what ratio it will be distributed? Profit on revaluation will be distributed in old ratio. Previously it was told. So 23,000 into 3 by 5, 23,000 into 2 by 5. So 23,000 2 by 5. So 23 divided by 5 equals to 4,600. 4,600 into equals to 9,200. 4,600 into 3, 13,800. Now revaluation is over. Now what to prepare? We have to prepare partner's capital. Partner's capital balance how much given? 60,000, 40,000 by balance BD. We have to keep in mind capital always credit balance. So credit side we should write the balances. Now profit will be transferred to capital account. I should write by revaluation. $13,800. $9,200. So what will be the journal entry for profit on revaluation? Revaluation account debit to J capital to D capital. Now we have to close the book. 73,800 $49,200 $73,800 $49,200 to balance CD. $73,800 $49,200. That will be brought down by balance BD. $73,800 $49,200. Now, a capital balance of where to transfer? We have to transfer and balance it. I am writing capital accounts. J D 73,800 $49,200. More liabilities there. Creditor. How much given? 18,000. Now total becoming how much? 73,800 and 49,200. 0 0 0 13,3 1 1 12. So 123,000. 1,23,000. Total will be 1,41,000. Both side balances are equal.